All right. Hello and welcome to the panel Market Access and Trading, where we're going to be talking about tokenization. Now, we have a very diverse panel here representing the industry of tokenization that is burgeoning. And we only have half an hour to discuss a very complex topic, which is oftentimes compared to securitization. And to succeed, I believe that we need to meet two key conditions. The first is the legal and structural framework to tokenize. And secondly is the condition of ensuring transparency, reducing information asymmetry, and making sure that the tokenized assets represent what they say they represent. Now, for the first condition, we have Stephan Lutz, who surprisingly is German. You'd never guess. He's the CEO of BitMEX that provides the platform. And then we have Timm Reinsdorf, also surprisingly German. He is with Particula, which works with information and making sure that you have real-time confirmation of the assets that are being tokenized. And then we have Ramzi Laieb, I believe it's pronounced, who will represent the real world of tokenized assets. So the way I want to structure our discussion is that we start with you, Stephan. I want to hear from you on why you think we should tokenize in the first place. What assets are the best suited for tokenization? And what are the legal and structural hurdles to overcome? For instance, like liquidity and the function of trading real-world assets beyond the speculation of its value, but actually the use case of having real-world tokenization.
Yeah, thank you. Just a word for the ones who don't know. So BitMEX is one of the earliest, basically the first cryptocurrency derivatives exchange in the world. And if you trade crypto derivatives right now, all the other exchanges use our open source market microstructure. So this is it. And trading and getting that market access at the core of what we believe. We created that, our founders created that for crypto, and now basically we look at for a more mid to long term shot, what's the next thing? That's why I sit here. And a couple of words about tokenization. Yeah, even I call that always securitization 2.0, because what is RWA and market access trading about? It's pretty easy. You have an asset that needs to be financed in one way, shape, or form. So you look for funds to finance it. And then you need investors, and investors want to have access to certain assets, right? And this is what you bridge, full stop, nothing more. So you want to drive down financing costs. You want to get up basically, nowadays in crypto, everyone calls that liquidity. I would say demand for this asset. And then at the third one, you want to have liquidity, which enables the investor who actually invested into something to offload this asset at a certain point in time before the maturity of the asset. Sounds complex, it's easy, I'll give you an example. Equities, everyone knows equities. Equities is a shareholding of a firm. If they're not tradable, you can invest into them, yes, of course, but you can't offload them. So if you invested 1,000 into Tesla stock, but you can't trade them, you will probably never get back your 1,000, only if there are dividends and they will pay it out to you. So the trading aspect actually gives you an exit, an early exit, and a value appreciation during the lifetime of the asset. So the interesting thing about RWAs is what assets actually to put on chain and to tokenize. And the good thing is with tokenization, you can fractionalize, right? If you say, I want to have this hall and I want to build it, and I look for investors, and you would have the lot size of one. So it's one hall. You need to find an investor who has enough money to finance all of this alone. If you go for classical markets, so basically you go to a bank. So in securitization, you cut that into chunks of at least 100,000. It's never less than this, rather more than this. Still a lot. Now imagine you can do this, and you do that in, we had it before in one of the panels, like square meters. You sell square meters of that building. And you do that internationally, not just in France, not just in Paris, not just in Europe. So you get much more demand. Actually, this is what RWA, tokenization of RWA is about. All of that full stop. And it's very difficult in a way, because you need to find assets that work like this, that actually have value or price appreciation. that have a constant or regular yield, so to say, because otherwise, why should I invest into that? Then I'm in meme coin space. So why should I do this? And then getting the legal stuff over. So the trading has been solved. We are on-chain, we have blockchain technology, we can do that internationally without tapping into the fiat, traditional finance world, which is quite complex. So this is solved. So now the question is, if you take this haul, as long as everything's fine, yeah, easy. But what happens if one of the contractors does something wrong? How do I solve disputes? So it's really the thing, how do I transfer this ownership? The technical people say it's easy, I say it's difficult. How do I really transfer the technical and legal ownership onto something digital? That's really the holy grail. And then other stuff, and then Ramzi, you really do that with something. So I'm very, very curious about what your experience is, because that's the thing. And Timm talks about the information piece, because in the end you can do this, but if you don't have, as you said, the information, no one will trade it because you don't trust the price that is found on an exchange like ours, for example, right? So you need to have a lot of sufficient conditions. So the necessary condition is get the asset, transfer it into a digital form, put it on chain, done. But the sufficient conditions are way more difficult to achieve. So maybe I'll stop here and we come back to that later.
Staying on that topic, though, on what are the types of assets that are good to tokenize? When property is the example you're using, I can see a lot of problems with that in terms of the legal frameworks internationally. If you have international traders that really have no right to own the property, and what happens in such a case. Timm, can you talk about what assets that you cover in your, and give us a little bit of an overview about what the services that you provide and how it is similar to Moody's or traditional finance?
Yeah, more than happy to do so. So my name is Timm. I'm one of the co-founders of Particula. And Particula is a real-time rating provider for all kinds of tokenized assets. And in that regard, we are not only focusing on the creditworthiness of the underlying asset or the issuer, but we are looking on all major product features. And I guess this is a main primer for our conversation today, because many people are not aware of the situation that tokenization is simply changing all major product features. And this is also one of the reasons why we are today talking about market access and trading, because the change of those product features actually makes it challenging. Yeah? So independently from the underlying asset, if we are talking about a single asset, a basket asset, a former analog asset or digital asset, when you tokenize it or add additional smart contract layer, you're changing all product features. And this means you have new valuation dynamics. Yeah? So Stephan, you were already talking about real estate. Yeah? When we are in this situation, that we can now trade real estate 24/7 without a notary, we should discuss concepts like liquidity bonuses, for instance. Then on the other hand side, of course, we have new regulatory frameworks. So internationally, we have over 40 different regulatory frameworks for crypto assets, digital assets. And the implications on that are, of course, that we are also bringing those tokens differently into our balance sheet, into our tax declaration compared to the underlying asset. And last but not least, of course, we have also different infrastructure. Yeah? And we are now seeing that the same underlying asset is tokenized from different providers out of different jurisdictions with different tech stack and ownership rights. And therefore, when investors are currently looking onto the market and want to get access, they are seeing, all right, I have one issuer, I have one underlying I would like to access, but I have it launched on 5 different blockchain ecosystem, and I can get access over 6 different tokens. Yeah? And this is really challenging, and therefore we need to look especially to harmonize those product features and look at the adoption curve, which kind of traditional assets or the attributes of traditional assets are also fitting the attributes of tokens, because it does not match all the time. Yeah? So when we want to trade a tokenized asset, we need real-time price discovery. Yeah? This is not given for every asset. Yeah? And many people are talking about private credit tokenization. I guess especially that is very, very challenging, because we have not real-time price discovery. And therefore, when we are proposing an adoption curve, we were starting with stable coins. We already have product market fit somehow. Then, from my perspective, tokenized bonds and funds are the next step. We have seen it with all kinds of fixed income products in the last few months. Then I was proposing commodities instead of private credit as a next step, because the underlying is plain vanilla and you can get the data. Yeah? Then private credit, then real assets like real estate, and then equities, because we already have efficient equity markets. But this might be also subject to change, because many people are now starting to work on tokenized equities. Yeah? But I guess to answer your question, Oscar, the attributes of the underlying asset needs to fit the attribute of a token to harmonize on and off-chain data to really understand the risk profile of each token. And then we need to create the necessary market access for institutional clients to enter it. Yeah? Also reducing the barriers from a technical perspective, create a Web2 interface, and also interoperability between different chains, especially when the same asset is launched on different chains. Yeah? Like the BlackRock BIDL token, which is launched on 5 different chains.
So how do you go about verifying the data, the off-chain data? I mean, with real estate, there are so many untold factors that impact the value of any property, and you only will know the price of a property once it changes hands. What I want to ask is, like, what if you'd been around during the subprime mortgage crisis, which was pretty simple by comparison to tokenization, but now you have multiple additional layers and parties involved. Just give me your thoughts on that and how you would solve this verification, because Moody's couldn't pull it off.
Yeah, I guess it's very, very challenging for one provider to solve this kind of challenge. We need a combined approach on all levels. Yeah, so when we're looking on the issuer token and the underlying asset level, we need to harmonize on and off-chain data, and we need to involve different parties on the one hand side to confirm the existence. Yeah, even this is not as easy as it sounds. Yeah. Then we need to verify the quality, and then we need to have processes in place for price discovery and matching the price discovery of the underlying asset with the price discovery of the token. Yeah. So there are many steps involved, and from our perspective, from the Particula perspective, our risk assessment is asset class agnostic, because we are always involving third parties for the assessment of the underlying. Yeah. So I'm not an expert in real estate, I'm not an expert in tokenized diamonds, and there are the Moody's and S&P of the world, which already provide very profound credit ratings for all kinds of bonds and funds, so on and so forth, which should be considered when evaluating a tokenized asset that gives access to this kind of underlying. Yeah? So from a general perspective, I guess we need different providers in different roles to verify the quality and also the quantity of the underlying asset. And then we need to have, I always call it a waterfall approach. Yeah? So oftentimes people are starting at the quality and existing of the underlying asset, but this is actually not the point. You need to start on the token level, and you not only need to understand the off-chain metrics, like you just outlined, Stephan, but you need to harmonize the smart contract with the applicable regulatory frameworks and the terms and conditions to understand which kind of ownership rights, if any kind of ownership rights, are transferred, if we are transferring a liability against the issuer, or if we have a no-claim. Yeah? When we have a no-claim, you buy the token, you do not get anything. If you have a liability against the issuer, you can iterate in the next phase, assessing the creditworthiness of the issuer. Yeah? And when you have a token that not only gives a liability against the issuer, but actual ownership of the underlying asset, where you can take your token, go to the custodian and exchange it against a physical good, then you can think about the quality of the underlying asset and bring everything together.
Thank you. Ramzi, I want to bring you into the discussion. You are with Carbonable. Is that how you pronounce it? It's
yeah, that's what I said. Carbonable.
So you deal with carbon credits, which is, many would say, is the ideal asset to tokenize, but it's been fraught with a lot of problems, especially to verify their existence whatsoever. And how are you finding this? What's the real world situation right now in terms of trading carbon credits?
So hi everyone. It's a pleasure to be with you guys today. At Carbonable, we have a more operative approach than financial approach to the tokenization, let's say. The question is how we could operate, how we could ensure the operative purpose of also the tokens. The tokens, you can buy it, but you have a lot of actors, especially in this world for the carbon credit, that need to generate these assets, that verify the existence of these assets. People are doing the market making, and then at the end you use it to do your accountings, to say, hey, I'm offsetting my carbon offsets. Our approach to that is that how we could have a good environment to operate these assets without the blockchain or with the blockchain. And my answer and my nuanced approach is that for the voluntary carbon market, it's complex to see how we could manage this kind of assets globally without stuff like the blockchain. So the blockchain is an answer to it, maybe not the final solution because there's still a lot of challenge, but at least it's a better setup than the existing world. So our approach is to say, hey, what is the best way to modelize the carbon credit? So we worked on the semi-fungibility, which is something between the non-fungibility and the fungibility of an asset, because in the beginning, the carbon credit is non-fungible because you have different way of having carbon credit. It's by funding a natural project that are in Asia, in Africa, in everywhere in the world, and you have also a different type of nature project that generate different kind of carbon credit. But at the end, when you use it and you do the compensation, one carbon credit equal another carbon credit. So you have to manage this complexity. And you have also to manage the way that on the voluntary carbon market, you have different actors that operate their own data and they exchange it with other players, which means that you have some opportunity or risk of losing information or losing the quality of the information. And when you lose the quality of information on that kind of assets, you lose the value of those assets. So what is interesting with the blockchain is how we keep the value, how we make all the players collaborate on the same data to have integrity and interoperability. But we can go further, and blockchain is not about, I think something is bigger than blockchain is cryptography, where you can also prove the computation of some assets. So for example, you can prove that one actors did generated this carbon credit with one specific approach, and this could be visible on the blockchain, and you can verify it. So to conclude with our approach on the way to manage this is we don't have like a big trust on the transparency of the blockchain for those kind of assets, because transparency it will involve like some companies and financial stuff of companies, and you will dox information, future information of what will be your financials in the future. But we trust more the verifiability, and the verifiability is really interesting in the blockchain because you can prove a lot of things. And I give you an example. You can prove that you will fund a project this year that you will use in 10 years because you have smart contracts that can help this. And this is what is interesting for us, is to manage the accountings, the operations outside of the financial state. The financial approach is really interesting to have a market, to have a value, to put a value behind it and to make it available. But our approach is to do some research, and we are researchers there, to find the best way to modelize those assets and to find the best way to give the proper environment to manage the data, because what is at the center of the value and the finance is the data, it's the verifiability and the integrity. This is the approach.
Thank you. We have a few more minutes left of the panel, and I wanted to take the opportunity to open up to the audience to ask a few more questions. Have you not been listening? Someone's got to have a question.
Well, then I don't have a question, but I want to hopefully give you a little bit of, let's say, help on how to navigate this. Because you saw it already with us. I guess if you went in unprepared, you're like, what do those guys talk about? I understand one or two bits and pieces, and then I have an opinion on that, and that's all good, right? So this is no criticism. But the thing is, if you look at tokenization of RWA, you can think of what's the input, what's the throughput, what's the output, and how do they communicate? Why? If it's a one-way street from input to output, then you see all of us here, and we can give an answer to quite a bit of that. So you're on the input side, so here's a carbon credit. How do I tokenize this? How does it work? Timm works very well on, as I now understood, on more the throughput. So what happens in between? What's the smart contract layer? How's the distribution? How's the repackaging, etc.? And then we deal at BitMEX with the output, because you have a token and you want to trade it, right? So this is for us. And as long as it's that and there is nothing else, this is, let's say, easy. And you can always slice and dice. It's like low resolution. You zoom out of a picture. The more you zoom in, you come to those questions we deal with, and it's quite complex. And you only see one pixel, and you're like, what is this? So, but now here's the difficulty about RWA. You not only have that one-way street, so you take an asset, you put it into something, you process it, you have an output, you have a new asset, and then you trade it or allocate it, but you have the other way around, especially if it's complex real-world assets. If it's not a collectible, that's a one-way street. If it's even a meme coin, it's more a one-way street. This is why it works. The moment with carbon credits, you want to reuse them, you want to do something with it, or you have real estate and you have a dispute or something, then the output becomes the input and it goes the other way around. And then it's pretty difficult, even with a great blockchain technology, because then you start tampering around with immutability. Because if you go backwards, you don't mute it anymore. So with a technology, you need to come up with different matters and to create overlays and overlays and overlays, which again is more like your sweet spot in a way. I mean, maybe not sweet spot, but this is what you solve. And if you know what you discuss, you know how to discuss. So it's input, throughput, output. And then if you have a two-way street, then like, oh man, because that's what I have to admit, I'm a proponent of blockchain technology. This is what classical accounting systems can do way better and way easier and way more efficient. And we haven't cracked this nut in full yet. Sorry.
I want to ask, BitMEX has innovated options and futures trading, and I think, you know, between the two of you, Timm, looking at verifying real-world data, the opportunity for arbitrage and asymmetry in information is pretty massive, and you could make a lot of money on options if you have information that somebody else doesn't. I want to hear your thoughts on this, Stephan. First of all, what do you see being introduced in terms of real-world assets on your platform, and do you see options being and futures being traded on real-world assets?
Well, yes, we see it, but I think you mentioned that. It's more on the lower end of complexity, right? I mean, you see stablecoins, which is a tokenized real-world asset. It's a tokenized fiat currency. You see tokenized deposits, tokenized bonds, etc. This is all there because, as you said, you have outside price discovery, so you have a reference price, which for us, as we do, and I'm not so much in options, I think options is, well, that's a panel in itself. Let's take futures and perpetual swaps. This is really the thing. The thing, but what we need for this is, it's called a mark price. We need this external reference price in a way, so to see whether the supply and demand for the perpetual swap, for example, is going in a different direction than the underlying asset. This creates then arbitrage opportunities, but this is good arbitrage because it will bring back those prices together. This is positive arbitrage. What you I think referred to as more insider trading. Right, which is something else. So arbitrage, I mean, I come from financial services and I studied capital markets theory, so I have a bias for that. So for me, this arbitrage, if arbitrage is there, if there are arbitrage opportunities based on transparent information, that's good because it will bring prices together, good price discovery. This is actually the biggest challenge for us because most of the more complex real-world assets don't have those reliable price feeds yet. We don't have a reliable 24/7 mark price. We might have, if you look for real estate, you look at comparable transaction multiples and stuff, which is, what is this? I mean, you can't trade 24/7 on that, frankly. So what we look at to bring to the space is working together with people who actually have an edge on this and can provide those mark prices, because that's not our edge. Our edge is the infrastructure to settle, to make sure it works, to collateralize, make sure there is less counterparty credit risk, etc. But we are dependent on that, which is probably a lead over to you guys.
Yeah, I guess this is a very good point, and I really liked your summary, Stephan, to zoom out. And when we are zooming back in, the price discovery topic alone is a huge topic. Also when we are getting back to risk assessment, because as you just outlined, it's very hard to get, on the one hand side, the data feeds in regard to the underlying asset. But what concerns me a little bit more is that I guess over 90% of all the smart contracts that we are seeing are upgradable, which means that the issuer can change the functionalities. Even in combination with terms and conditions, they do not have to notify the investor. So it can be the case in many products that we are currently assessing that somebody's changing the terms and conditions overnight which are the smart contracts, to a certain level at least, they do not have to notify the investor, and the investor is waking up with a complete new product. Yeah? And then we need to start again with price discovery. We need to see, okay, which kind of ownership rights are transferred. So there are many unanswered questions when it comes to price discovery. And I guess also for arbitrage, we need more liquidity. Yeah? And I guess one of the main challenges also for institutions to get into the space is that onboarding is so damn expensive and hard to do. You need to convert your fiat into a stablecoin. With the stablecoin, you are onboarding in the tokenized asset. And when you want to do the other way around, you are offboarding in the same procedure. Every step involves cost. Yeah? And we have several parties involved in the process, which makes it really challenging and unattractive for certain assets. And then we are also once again at the point which kind of assets should be tokenized and which kind of assets we are going to see being tokenized in the next few years. Yeah? And I guess those are very important points to consider, and everybody who wants to make the step into the space needs to have, on the one hand side, thorough initial due diligence, but also ongoing monitoring in place on the off-chain level, on the on-chain level, to really see how is my product evolving over time. And of course, when we are thinking it through and also discuss metadata attached to the product, we can create very interesting products. We can automate a lot, yeah? But currently it's still challenging based on the regulatory fragmentation, based on the lack of liquidity, based on changing product metrics, to really get the necessary understanding that we need as a baseline to create market access and trading opportunities.
Thank you. I guess we have 1 more minute, and I'd like to give the last word to you, Ramzi.
I think the purpose about having or not the blockchain, I'm speaking about the things that operation, is that we have a lot of things to do. It's bringing like something that was not available before. Real world assets is really a challenge to be able to do things that we were not able to do before more effectively. And it should be, for me, it should be so only like this, and it's already enough. There's a lot of challenges or opportunities for others. But there's also work done. You have the blockchain, which could be like a settlement layer or like algorithms that are autonomous. But you have also cryptography, verifiability that is coming to prove the data to guarantee the integrity. And there is a lot of things to make it evolve in the future. And I think I'm coming from the supply chain and the operational systems and so on. For me, operation, having something like the blockchain, something for the SLA and so on. You know, when you have industrials that it's a nightmare for them to change only one code that is in the retails, the work and the people it takes just to manage this change, this phase in, phase out, is a nightmare for something like really stupid that we see every day in the blockchain. So of course there's some auditability, things are really new, but people are going really fast, and what it's open behind, it's opportunity of having the data synchronized for everything and having it really precise or verifiable. So that's a lot of research that we can do there, and this is what we do, and that is what is passionate me.
Thank you very much. I think that's our time.